the government of Pakistan issued the microfinance banking regulations, I think they had no idea how successful they will be, and the overall increase in banking sector access has been mostly done by the microfinance sector, because they have gone out and they have a different business model and they have different kind of people and different approach to things, and so they have prolifered and done very well. The second change they made was the introduction of branchless banking, and again, with the new regulations and the new way of doing things, there was a huge amount of innovation. So my view is that actually again, the traditional banks, both because of internal constraints of their thinking and external constraints of the kind of business that they can do, under the present way of doing things, I don't think they will be able to do much. That doesn't mean that they will go away. I mean, railways are still there even after 200 aeroplanes came in, but the growth will shift to some other part.
So is that a maybe?
No, it's a no. The banks as they are, with their the legacy management in there, with the profits flowing in from the legacy business, will have very little motivation and ability because of the strong regulation.
Very good. Thank you. Faisal?
I would amplify what
Mike? Faisal's mic?
We can hear you, but I don't know these
Okay.
I got it.
So I would amplify what the two gentlemen have said, and the answer is clearly no. I think we're too complacent. I think the old school mentality is still there, and even if new crowd is inculcated into the culture makes it so that the conservative thinking props up. So I don't think so they will be innovating on their own, but there will certainly be a role that the regulator has to play. Right now, in my opinion, I feel the barriers are too high and too strict. I feel that the regulator is not going out enough into and meeting up with other international regulators to ease the platforms so that others can come and innovate. And I feel the banks themselves are just too cloistered. They just don't want to open up for fear of the unknown, I guess. So it'll be peer pressure or trickle down economics that will come down to them and make them open up, but not internally.
So if I take a step back, right, and I pose a slightly different question. Is the absence of innovation necessarily a bad thing? As do we really need it? Is there...
Well, it leads to obsolescence, right? I mean, if you don't do it, obsolescence just kills you, right? I mean, if you don't do it right now, in every boardroom, I think the word blockbuster and Kodak probably pops up because they say, we don't want to be the next Kodak, we don't want to be the... But the thing is, don't be a frog in warm water, right? I mean, it'll become boiling water at some point in time, and obsolescence will kill you. It becomes too late and too expensive to catch up. So that would be my view on it.
Can I add to that? So, of the 100 firms who were in the Fortune 100 in 1929, today only one is there, GE. And the way GE is going, it won't be there for long either. So it's not the strongest, the biggest, the most powerful that will succeed. It is the one most willing to change. And people who are in love with their business model will die with their business model.
I would tend to agree with them, right? It's not a question of if change will come, right? It's when it will come. And you have to innovate to make sure that you're ahead of the game, because you just don't have to look at the market yourself or the market that you're in. If you want to do business with the outside world and you continue to operate a certain way, where the environment around you is completely changing, after a period of time, you'll be obsolete in the way that you do business. Nobody will be around to do business with you. Hence, the time is now. People must try to move the right direction. When they start innovating, at least thinking about it, not just by holding, with all due respect, just award ceremonies to say, okay, we innovated, here's a pat on the back, and we have to get out of that thinking as well. We have a huge mindset issue.
Right. So if you build up on this, right, first is it's not going to come from the banco and telco sector, right? Two, yes, it is required, it is necessary, it's a part of our evolution. So the third question that comes is that if it's not going to come from banking and telco, and these are, as I said, very deeply regulated industry, there's a big ticket price you have to sort of pay to have a seat on the table. Is there outside capital available that will fund outsiders to innovate, to come up with ideas in the fintech space that change the landscape. And we'll start off with Faizan.
I believe there is outside capital, but there's a
Enough.
there is reasonable capital available, but to mobilize that capital, you need the monolith banks perhaps to open up the ecosystem, right? They may not, well, they may be regulated themselves today and not be able to do a lot of these things, but they can definitely be enablers. They don't have to be folks who disable others' entry into this space. They're so used to their fees and service charges that they're unwilling or unable to let other folks play in the sort of ecosystem. And the example that comes to my mind is there are roughly 11 banks that participate in OneLink, right? Nothing new has come out of OneLink. And the banks don't necessarily have to offer their own fintech services, but since each one of the banks has a seat at the table, at least they can get together and allow for this new innovation to happen by either creating APIs, stacks, other things that enable other third-party folks to come in. So the money is there, but the willingness or the ability for the banks to transact and do things that they themselves can change is not happening at a pace fast enough.
Shahid?
Okay, so I think that's not the right question. Capital around the world is chasing for value. We just got Alibaba to put down $185 million. Alibaba also got into the RAS. Now their Rail Cloud, their cloud computing is saying that they are going to invest up to $500 or $400 million in Pakistan. So money is there. Essentially, this has to be run by how open the market the government wants it to be. And there are pros and cons to both sides. India was behind us when we launched branchless banking regulations. They didn't have anything like that. Today, Indian regulation has leapfrogged and are ahead of us. And they have Google Pay and others coming in. I would be really happy not to see Google Pay come in. But if we want really the market to grow and to get the benefit, then the regulation has to come in. And I'll take 2 more minutes to try to explain to people why it is important. And this is an example I give very often. My friends have heard it a lot. Why do you think the RP has been able to fund the agricultural sector for the last 5,000 years? It is because Aarti has better information. He knows the farmer, he knows how much land he has, he knows his daughter, if the farmer's daughter is getting married. The banks don't have the information, so they need security like the land records. If there is electronic payment systems and bank accounts, then that information becomes released, and then the economy as a whole can value a business line, a farmer, a small trader, and give credit and saving opportunities and lending opportunities. So it will allow the GDP growth to increase and for the economy to prosper. So it is not just the fact that I can buy cheap airtime. That is just the beginning. The goal is much bigger. But the crux will be how much do we want this to be, I won't use the word deregulated, but regulated in a different way.
Selectively open.
We have to selectively open in order to get the benefit of the new technologies. We opened for cell phone communication, and now you see the benefit of that.
Faisal?
I would take the last point and run with it. I think we need to have softer regulations, or regulations that are at least slab-based. So if you're a small company today and you want to, there's plenty of capital available, but the barrier to entry as far as capital requirement is concerned to be a fintech startup to play in the payments and banking or pseudo-banking space is way too high. If PSP requirements in Pakistan is $2 million, in Singapore it's zero. You can have a net outstanding for $30 million overnight and you still don't require a license. That's how Monetary Authority of Singapore has sort of structured it. You can start a small payment institution with 3 million euro monthly processing limit in the UK for 1,000 pounds. 1,000 pounds. You can do this all across the EU for 1,000 euros. Why do we have to have a 2 million barrier to entry? How will a small company that wants to make the next Venmo or Braintree or payment system out there compete because they don't have access to $2 million. And my fear is, because of such restrictions, the mistakes can be fixed, and it is a mistake, have no doubt about it. I mean, present company excluded from State Bank, but it is a mistake. We need slabs, we need lower slabs for entry. Put a caps on them, but we need them. And my fear is, we won't have homegrown solutions. We will have the likes of Google Pay come in and take over the market because they have the money. We'll have the external factors come in, and because we did not have the capital and the will and the regulatory will to go and give the industries and startups out there a chance to say, come and play in the field. And the external players will come in and they'll say, that's it, it'll be too late.
So if I take what you just said, right, so one aspect is maybe softer regulation, right? But what else has been holding us back? Fazan said last 20 years, nothing significant has come out of one link, for example, right? Shahid said Shahid spent almost all of his life with banking. Shahid said, from no. So what else is holding us back?
I travel for a living now. So I can tell you one thing. One thing that I've seen is education. It starts with education and awareness, and it starts with the regulator. If you go to Money 2020 or any of the shows, who's out there? They have, for example, Lithuania is now competing with the world, right? So the Lithuania Central Bank and the payment systems team, they're all over there. They say, let us tell you how you can do business in our country. They're all there. We need education. Right now, to even find out how, if you want to start a money transfer service, or if you want to start a small payment, or if you want to put a small POS network, do you even need a license, etc. Try sending a mail to the State Bank of Pakistan and getting a reply. I've actually done that. And I've measured it. And not just the State Bank of Pakistan, just to be fair, I've done it with all the banks. The results are terrible. So our interaction, social interaction, especially for purposes of education, cannot even rate it on a star system. It's so bad. It starts with education and awareness. We need more education and awareness within the regulators, and for them to go and partake with the industry and educate them more and say, how can we help?
You want to say? You want to jump in? Please.
So essentially what we're doing by way of where we are today is we're saying, hey, this is a cheap market or an inexpensive market for somebody to come in, acquire a bank or a banking license. The barrier to entry, if you're a large scale player, is fairly low, right? Spending $100 to $200 million is not the end of the world. So what will happen is that all the regional players will start competing in Pakistan as well. So my fear is that sooner rather than later, this will be a battle between the different payment providers in the ASEAN region as opposed to local innovation being able to surface. Because to Shahid's point, you need domestic information, you need relevant local context. If these companies start and come before everybody else, they will have their own sort of domains where they will lock in that institutional knowledge about, for instance, the agri sector or the transport sector or some other sector, and it will be a game about disinformation or, not disinformation, a game about the information that you own yourselves. It will be locked in corporate silos, and there will be no net new innovation happening domestically because the larger players would have come in and sunk the money, collected the information, and the barriers to entry for local players will be way higher than they are today. So folks have to act and react today as opposed to wait 6 months where international players come in. It may be good for the foreign exchange piece of the equation today, but long term, unless you have softer regulations, you enable domestic players, nothing new will happen.
Fazan's mic went off. So our discussion so far has been very focused on the payment space, right, or the banking space per se. What about insurance? What about other areas of the fintech innovation landscape? Banking, I understand. Insurance, to some extent, I would also understand, right? But why we haven't seen a WeChat with a payment solution come out of this market?
You're asking of the low-hanging fruit is payments.
Yeah.
It always starts with that. B2B is the basic low-hanging fruit. If you ask InsurTech or payments, I think fruits are much higher.
All right.
Even the awareness level, I think JS Bank is there and Habib Bank is there, and they have published open APIs, etc. Go to the campuses and ask and say, hey, if I have a project, whose API would I use? They wouldn't have a clue. There is a disconnect where what is available and who is it available by, and those who want to have an idea.
Okay.
There just isn't a connect, they're not meeting. And once you have the basics, the low-hanging fruit, I think, you know, the umbrella will go, we'll put the ladder and we'll get the high-hanging fruit.
So you say it has to start with payments.
It, in my opinion, yes. See, there's something called the Goldilocks condition in physics. You know, it's not too hot, not too soft. You know, just right, everything, and one leads into the other, and so forth. But in payment space, there has been massive amounts of studies in Pakistan even. The Wave reports are really, really great resources to read. Unfortunately, people don't read them.
Yeah.
Karan Das puts it out, by the way, with others. And again, the Goldilocks conditions are very, very clear, and they tell you what the payment, basic necessities of payment. What do you do with your thing, with your money? When you get a payment check, do you think about starting an insurance company? Do you think about paying someone else?
Yeah.
That's the basic premise of society, how communal value moves. B2B payments.
Shahid?
You'd agree? The basic thing is that we are the most cash-oriented society in this part of the world. Our cash circulation over bank deposits is, I think, in the 30-some%. India is close to 10. We have the lowest saving index in this entire region. Saving over GDP, we are, I think, close to 6%. India again is in the 20%. Your GDP growth cannot take off until you have greater domestic saving rate. And so the center of the plate is going to be banking. Now, one very important question is, why is banking important? Banking is what makes the economy work. If tomorrow Toyota stops producing Corollas in Pakistan, the Pakistani economy will continue to work. If we have a bad wheat crop, we can import and we will continue to live. But if banking stops, essentially all transactional work will stop. So banking is something very special. So that's why it's the center of the plate. Insurance comes in, manages risk, so it's very important. Until and unless we can get more than present number, between 15 and 22% of different estimates of the Pakistani population have access to banking. Until we can get that into more than 50, we have no hope of trying to grow like China or India at 7.5%, 8% and do a consistent job of it. And without that, and just for everybody here, Indian economy today is, I think, about more than 7-8 times Pakistan's economy. Say round about 10 times, not 10, it's a bit less. At the present growth rate, by 2050, there will be 25 times Pakistan's economy. So countries make plans which go 5, 10, 25, 50 years. So what we need to figure out, and that is the government and the regulator, is where do we want to be in 20 years? What will it take for us to be there, and how do we break it down into 4, 5-year slots? If we think like that, then we can get there. So center of the plate is banking because it is the most important, and without fixing banking, your other fixes, you fix the textiles, you fix the agriculture, that alone will not work.
Comment?
Tend to agree with both of them.
Right. So I have one very basic question, right? I'm a very simple man, not any complex vices or habits, and I think my wish is that I want to see a world where it is faster for me to pay through my phone than by throwing cash on the table.
Yeah.
When will I see that day? So in your opinion, in your mind,
Today.
is that within reach? Is that
Today, you can go to China today.
No, in Pakistan, in this
But
country.
the point is, if China can do it today, so there's nothing technologically stopping us. The technology
So the
is there.
POC is there.
So everything is there. So in China today, you get into a bus, the bus will not accept cash. You have to tap and pay. You don't have a choice. You want a train, the